All right, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, let me know that you can. I would greatly appreciate it. Afternoon, Brenda. I hope everybody had a lovely 3-day weekend. For those of you that were fortunate enough to get it, I guess. All right. Hey, Kevin, Jim, welcome everybody. Outstanding. All right. Give me a sec here, guys. I'm just kind of finalizing something here. All right. Bueno. Let me get my camera going. There we go. All right. Wunderbar. Welcome, everybody. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So, interesting day today, that's for sure. Um, Phone is blowing up, baby. Good point. Share the dang screen, Rob. Thanks, everybody, for that. I much appreciate it. I see it. I know what I have in front of me. Okay, excellent. Phone's blowing up today. Not surprised with what's going on with the market. We'll talk about it in a moment. Not that I have answers, I just know what's going on or believe what's going on. We're going to go through our agenda. Follow us. Page will hit first, and we'll get into today's trades, economic reports, market review. That's a big one. And another fruition coming true. Upcoming future trainings, weekly training topic, and your stocks in review. All right, so there we go. All right, here's our follow us page. For some reason, it wouldn't let me click down. Everything on here is you go to the website and go to put Wealth Builders HQ for TikTok or for LinkedIn and so forth. But the trading post, Andrew will drop a link in for you for that you guys can register for that. That is our newsletter. Comes out every single trading day in the morning, usually right before the market opens up. Actionable items in there as potential trade setups of the things that we find to be the most important stocks out there right now that you need to be focused on. And we do it every single day, trading day. All right, today's trades. Any of you brave souls put any trades in today? I was not one of them. Big move to the downside on the market today. Tremendous move down. I've got some trades to share. Yep, Brenda said not with exclamation points. All caps. Yeah. I'm looking at the market, the gap down. I mean, we were a couple hundred points on the Dow, or 1.5% or something on the S&P. Um, and we're not going to talk S&P just yet, but we're down, about 80 points. But here we are. We're all going to talk about it, but that's where we're at right now. Mark said, except oil, gold, silver. And I didn't look. It's funny. Um, I check constantly because of my wife. What's the price of gold futures? 4,754. $47.54. You guys won't be able to hear her. She's still home. Hey, Ro, gold is up $159. It's up to 4,755. My wife's having a party inside. She's excited on gold. Silver, same thing, guys. I mean, I don't know what silver is. Let's see. S Silver futures price, $94.11 on silver right now. So just yeah, and there have been some stocks that are up. Absolutely, Patty. I saw Costco, which is a great. I love the stock. I love them as a company. I think they're a phenomenal company. Right? I think they do well. They retain employees well, from what I understand. I've got family that worked for them for a very long time. 24, 25 years, my cousin works for them. Every party we get together, we're talking about how much he likes working there. Um, Bitcoin is still dropping. That's okay. I want to buy some more. on that, Jim. So I'm good that it's dropping. I'm happy for that. Netflix didn't drop as much as I would hope, but a little bit of a bounce with the earnings, but we'll see. But overall, it's been an interesting day, right? So if we go back though, let's look at some charts and let's do this. So guys, here we are. I'm going to show you numbers up to January 15th. And actually, let me do it this way. Let me take these all off of this page. Let me cut it off of this page. Nope, not copy, cut. Copy would be bad. No, 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 I can't do that. All right, it's too long that way. Let me do it this way. And let me just put it all on one page so you can see it instead of me trying to share with you multiple things that are just going to get crazy. All right. So all you're seeing right now is 24 lines, right? These are the number of, this is the last trade that we did in power option plays that we recorded. I'll do another video today because yesterday the market was closed. I'll do another video today for pop updating where we finished up last week for Friday and the likes. Okay, Friday and today. But if we go up and look, so the first four lines are headers. So four lines are not actual trades. We're on line number 24. That means we've done 20 trades so far in the first 15 days of the year. We've had one massive, massive, massive trade that was booking. These are all one contract trades, by the way. This is a one contract trade. So imagine what our full contract trade looks like on booking. We're up $9,800 on that. If you take that out of the mix, we're up $17,000, $18,000 this year on one single contract in power option plays, just one, right? So if you take $10,000 away from this, just say, I don't trade booking, Rob, you're up $8,000 for the year in the first 15 days of the year. On what would be the equivalent of probably about a $7,000 account is what you would need to do this with. Maybe eight, $7,000 or $8,000 is all. Yeah, that's it. It wouldn't have been more than that. Would not have been more than that. $7,000 or $8,000 would have been more than enough money. Oh no, we're only doing one contract here. Yeah, if you had $5,000 for this, you would be fine. You would have been able to do each one of these trades that we did. And if you look, last week we had three CrowdStrike trades. 3 days in a row, we took the trade off of the exact same level. Same entry price, different exit price, of course. Right? Two of them were the exact same exits for 2 days. Let's see, that was 13, 14, 15. All right, let me shut that off because my phone is not going to stop. It's doing this all morning. To the tune of about 200 messages, emails, voicemails. My favorite are the ringless voicemails, the ones that don't make any noise. Why did it do that? I grabbed the wrong tab. Sorry. Let's go to CrowdStrike. So here we had three trades right here. 1, 13, 14, 15. Okay. Oh, I know why we had the same exit. I got it. So we got the move down here. If we look at the 13th, we go to a 5-minute chart. Should be able to go back and see that on the 13th, right? We pushed up. We came down in here. So we got to go back to a 1 on the 13th. Here we go. So we opened up, we came down in here, failed down through this, came back up in here, and it caught us right here, guys. Right off of this area is where, let me just put an arrow there, easier to see it. Right off of this failure in here, that's where the trade was taken off of the close, the retest, the fail. Okay. And this is on the 13th, right? So that's this first day here. So we wound up getting stopped out of that trade, right, on the move up. We got taken out of that trade. No, we didn't lose much. It didn't cost us very much on it, but we're down $370.50. All right, on just on CrowdStrike. And if we go back the next 2 days, we gap down, retest and fail, gap down, retest, fail. So if we go and look at what is this, the 14th on a 5 minute. So here's the close, the bounce. We'd have to go into ones, but guys, it was right in here. I'm not going to spend the time to go pull the ones up. It was right inside of here where it happened. We closed there, gapped up, fell down, pulled back up, failed. In what, this candle, one of those two candles within those is where we took the trade. Okay. Both of them before 11 o'clock in the morning. And we got out because of support. We got out at the same price above support. We've got a standard exit on power option plays. And the exact same thing happened on the 15th. If we go back and look for the entry on the 15th, right in here, we moved up, we closed, we pushed down, we came back up, we failed, retested, dropped, and there's the entry, right? And then great move at the end of the day. All right, so all 3 days worked out well. Like I said, we had one day down 370, the other day is up 720 each day. So down 400, up 700 each day. Costco is $1,000. We've only had 2 trades go against us so far this year. We've been very conservative. And once again, I would say for the average person, you're not going to trade a booking anyway. Very aggressive stock, very big bid-ask spreads, high volatility, expensive, just very expensive options. It's in power option plays, so we take it, right? Outside of that, they're all one contract trades, and the biggest mover up was Tesla. Second trade of the year was on January 3rd. So second trade of the year. So overall, we've done well. But last week with 3 CrowdStrike trades, and then we had a Costco and an AMD in there. So overall, not too shabby. Let's see. It's dropping. Okay. Riding the roller coaster with Costco. Yeah, I get it, Patty. So, I mean, they are just hammering out. Look at it. Granted, they've been beaten up a little bit, but their move in the last, week and a half, 2 weeks, 3 weeks has been outstanding. 850 to 950. We're up 100 points in 3 weeks on Costco. It's been a very nice moving stock lately. Very, very nice. All right, let's go back into the presentation. Let's go take a look at economic reports. Let's see. You got WEF today. So here we've got an orange report. Rob, what is this, right? World Economic Forum. You don't know what it is, click on the box, click on the folder. It'll show you, make sure you use the X to get out of it. It's not very clear how to, but you use the X to get out. So it is orange today, and tomorrow it is red. Why is tomorrow the World Economic Forum red, and today it is orange? Might have something to do with President Trump speaking tomorrow, and who knows what he is going to have to say about World Economic Forum inside of there. But we are red there. Actually, I think one of the days during the week it's yellow. So they're all over the place with their coloring. This was a topic in, he's in Davos. Okay. This was a topic in our inner circle meeting over the weekend, Friday and Saturday, of the accuracy. I think we talked on it Saturday. The accuracy of some of the stuff in Forex Factory, good, bad, or indifferent, of is it really, are the color codings accurate by them? And, it was pretty much a consensus that they're not. You guys have heard me say it time and time again. So coming up today, we've got nothing other than World Economic Forum. Tomorrow we've got home sales at 10. Keep your eye open for that. GDP numbers are 8:30 on Thursday. Big reports. We'll see what that comes out. Unemployment claim can be important, but it's pre-market. PCE is coming out. So we got that at 10 o'clock. That could have an effect on the market. Friday, we've got World Economic Forum again. Flash PMI Purchasing Managers Index, that's at 9:45. That could have a big effect on the market. I would expect that PM Purchasing Managers that report is going to be looked at for how tariffs are affecting costs of purchasing, companies buying goods, raw goods, to make their products, how the tariffs are going to affect them overall. So we'll keep our eye open for that. Yeah, Supreme Court hasn't ruled on tariffs yet. You mean if they're legal or not? That'd be interesting if we had to give all that money back we've collected for the last 70 years or so. It won't happen, but for many, many reasons. All right, let's go back in here. So market review. Woo, we got so much to talk about on here, baby. All right. So first things first, we've got a climbing series of bottoms in here and a slight decline in our tops in here, right? But giving us a wedge pattern. So based on the wedge, let me get rid of my crosshair. It's here. Based on that wedge being here and here, we're looking at where did the wedge start, right? You're looking for a support and or resistance level. Where was the start? This one happened to start here. Yeah, you can't go back to here and here. That's not where the wedge started. Not what I'm looking for. I'm looking for the pattern that's setting up in here. I'm looking for this, okay? That, just like you would an A or a descending triangle, that happened in that area right there, right? It's actually there. And what we're looking at then is if you take the starting point, this day right here, and we draw a fib, a time ratio from that point to where the convex, where the two lines intersect, and you snap it there. I don't care about these out here. Don't worry about those, okay? I'm only worried about these two lines here. And it's 8 and 10. So it's 38 and 0.382 and 0.236, right? So when you have a wedge, your highest probability of breakout from that wedge comes within this range right here. That's where the ideal breakout happens. Now, on this pattern, we only had 2 or 3 days in there, 8, 9, and 10, 3 days in there. So it's very small. So this went one extra day and we got this big, massive gap down. Was this a technical gap that happened today? And the answer is no. Yes, but no. Yes, technically it happened, right? It was technical analysis factors played in to where it gapped to, but the gap itself over Greenland and tariffs and all of this junk going on with this stuff right now, that's kicking in right now and causing what's happened. Flight to safety is going to be gold and silver. Fear is money coming out of the market. Mass fear is money coming out of tech stocks, which is what you're going to see happen. You're going to see the biggest drops take place on the Amazons, the tech stock companies of the world. Excuse me. Will that affect AI the same way? I don't know. AI is a tech company of its own breed, of its own behemoth, if you would. Okay. So this wedge was broken today, gap down. The gap down is usually only 40%, 40-ish. It depends if it's a gap up or down. We'll use 40 as a round number. So that right there is about 180. Let's see. Where is it? 180 times 0.4. $72 to the downside. So the gap down is expected to be 72 from the break of the bottom, right? So if we grab our, yeah, okay, 72. We grab our dollar difference tool from here, and we're looking for a $72. I'm going to just bring it out to the side so we can see a little bit better. $72. So if I get my crosshair back in there, it'll be easier to see. Actually, we'll grab a line. This was where the average gap, where the average, not gap, sorry, not a gap, where the average move takes us is down to that level. We gapped almost to that level. That's how big of a move it was. We did this in one fell swoop. Now, a couple of things took place here, and I'm going to get rid of the things I just drew on. The other one I'm going to leave on there because I need to explain this in pop today. We'll go a little bit more in depth. But the other thing to be concerned with, or to notice, to take notice of, is you'll see we had a low. Let me get a red pen. We had a low and then we had a high. We had a higher low and a higher high. And I'm not going to do the letters anymore. You get the idea, okay? Higher low, higher high, right? Higher low, higher high. Higher low, higher high. Higher low, which was right here, okay? And higher high. No, I'm sorry. Low, my bad. Lower low, which was right here, and then we put in lower high. Right now, and then that line right there, I drew that in red, right? Because the break of that level was where the concern was. That was our low, our higher low right here. That's where the concern was. If we break that 68.85.74, I think it is. Yeah, 68.80, we'll call it 68.86. We break that 68.86. That's where all of this movement up and down, we had a low, we pulled down in here. I don't care. I don't care. The thing about it is this day right here, why was that day? What caused me to make that day red? Why did I draw? Let me do this. Let's bring it in. You guys tell me, what caused me to make that day red? If we had here a higher low, and then the next one here was higher high, right? Then we had here a higher low, and then we had a higher high. So why is this one red? Right. It gave us it gave us a lower low. It is new. Yes, it is a lower low that we put in there. So what happened on this day? The way that I describe it is the bears chipped away at the ice. They took their little chipping hammer and they chipped away at the ice and they said, listen, guys, if you want, you can go through it. We started the way for you. We paved the path. Doesn't have to be the next day or the day after, but there's weakness at that level because the market can see it has been broken before. And what happens? We gap up the next day, we pull back. We gap up again the next day. So that's Thursday and Friday. We pull back. It gives us a slightly lower low than we had the previous day, but still not breaking down below here. So this level became very important for us of if we can sustain above there, and the way to have sustained above it would have been to have put in a new higher high. That would have negated the chipping away at the ice there. It doesn't mean there's not weakness there, and it doesn't mean we don't come back to it. It means for right now, we had broken away at it, and if we got higher high, for now we're okay. We've kind of, yeah, okay, it was a sign of weakness or a show of weakness, but not a big deal. You know, we're cool. We could pass it up, okay? But we broke it today, and we broke it with a vengeance, right? And if you, and I've said this 100 times over and over and over again. Where is it? Where's my perplexity? Oh, I got stuff drawn on the screen. I got to get rid of that first. Okay. So this to me is one of the features I love the most on Perplexity. All you have to do is there's a finance tab. Go to the finance tab. And what does it say? Trump's Greenland tariff threats trigger broad market sell-off. President Trump's threat to impose 10 to 25% tariffs on NATO allies over Greenland sparked a widespread sell America trade, sending the Dow 500 to 700 points and the S&P down 1.5. The move triggered risks off sentiment across global markets, with investors dumping U.S. equities, bonds, and the dollar. All right, and then there's others. You know, you could read others in there as well. You could see where we are with the market. The Nasdaq's down 350, the Dow is down 570, VIX is up 3.25, 3 and jingle. We're already back in the yellow zone from where we were. So gold hits record high, guys. I like this for everything related to markets, just as an FYI. Okay, so if you're looking for a quick understanding of what just happened without trying to search and getting 600 different answers that have ads attached to them, something like Perplexity is great. Um, let's see. Dennis said it was pointing the wick downward, signaling the chipping hammer direction into the ice. Correct, Dennis, because you can chip away at the ice up on top too, right? If you fell into a ditch and the ice fell over, you could still chip your way out of it, right? Hopefully you're chipping the right way, but you get what I mean. So yes, because it was the wick broke down and it broke our previous higher low, and that was the key, is that higher low. Once that higher low was violated, it was time. It was time. The market said, if you want, if you're ready, then you can take advantage of it. Go. And it took 2 extra days, 3 extra days, I guess today, but and we broke hard. Now, was all of this technically built into that move? In other words, the weakness we showed, the wick coming down. I don't know where and how far back this stemmed and how much of it Wall Street had already been concerned or not, right? For me, I'm very much a technical trader. The news doesn't play a whole lot into it for me. When I see a day like today, I for sure, if I didn't see what was happening, if I didn't have CNBC on earlier and I didn't know what was going on, for sure I'd want to know, hey, I'm getting ready to trade the market. What the heck just happened that everything is down as much as it is, right? Because this threw every potential trade that there was for me today off. I'd only be looking at bearish trades for today. And prior to this happening, I'd only be looking at bullish trades. All I'd be looking for were bullish moves. That's it. That's it. So anything that started with bearish, nope, wouldn't have been interested. Let's get this a little bit bigger so we can get a better view, right? So that would have been interested. And this is, we got a gap down on this one and a nice run, but I'm not going after that. We gapped away on this one. It was bearish. I didn't care. It moved bearish. Big gap to the downside. Was already bearish, right? Was already bearish, right? And now you get to Costco. So yeah, was Costco an opportunity without a doubt? So did the pattern set itself up today for Costco? Let's go look at a 5-minute chart on Costco and let's look. So big move up, big push down. Can't tell on the fives. Let's go look at a 1. Because the first candle on the fives was just massive. All right, so we've got support at 958.5. We closed on that first 1-minute candle at 959.80, so well a dollar above. We stretched back down and bounced. So was there an entry opportunity in there? Yes. Were you stopped out down here in the pullback? Possibly, right? If you held on this long, to me, I think you would be nuts. With a bearish day and we start showing weakness, actually on these weakness here, these candles down, I would have been long gone. Whatever I would have made, whatever a little bit of profit was in there, I would have locked it out and ran the opposite direction, right? And then this here, would I have held all the way through this move? So double top, triple top, starting to fit. No, I wouldn't have held through all of this for that move. Not on a day like today, right? My SPY strategy is a phenomenal strategy on days like today. We go back to a daily chart. CrowdStrike was nothing. It was already bearish. This was bullish neutral. This was already bearish. See, guys, most of our stocks, we gapped down on this was a bullish stock. We were sitting right at support. This was on my list as a potential bounce off the 964. Everything changed when the market opened up today, or before the market opened, but everything changed this morning when people woke up to market news to see what was happening out there. Everything was different at this point, right? And the S&P 500, right now, we've got a new target, right? What is it? This 6720, that's our next down. Okay, let me back up. Yes, we have other fib lines in here. I'm not discounting the other Fibonacci levels that are in there. I'm not discounting the ABC lines that are in there. I am certainly not discounting the 6765. Powerful line. But we're going to move up and down. I'm not going to worry. I'm going to look at the next lines of where we're going. My next fear comes in if we break the 6720. That's the next concern level for me, is the 6720. Granted, our trend is, this wedge is gone. I'm leaving it there for today because I want to go over it and pop tonight. I'm leaving it there for today, but other than that, it has no value any longer, nor does this wedge pattern that I drew in there, nor does turning this one red. That'll go back to a regular blue bar after I'm done for the highs and lows. But this gap down, and we don't know what the rest of the news brings. We don't know what happens tonight and tomorrow and over the next couple of days with this. Is this going to become yes, Greenland says, okay, we'll sell to America for, $14 and six trees planted a year. I don't know. Back in when they sold Manhattan or whatever the hell they got for it, whatever ridiculous numbers it was. Are they going to do that? I doubt it. Right? Is there going to be some negotiations over some of the materials over there and so forth, and trying to secure some of it? I think the U.S. is going to pursue that pretty heavily while under the leadership of Trump. I think as president, I think we will see a lot of that take place. Right or wrong is really up to you to determine if you think it's right or wrong. But if we don't do something to start securing our future, guys, we're going to have a problem because too many of the natural resources that we need, we don't have. And I'm not saying go to war over them or anything else. I'm saying that we've got to figure out ways to get it where we can get access to these minerals without fear of. I mean, look, my biggest fear personally is someone needs medications. There's a conflict with China, and China just says, "Yeah, we're just not. Yeah, we're not gonna make any medicine for you anymore. No more medicine allowed to ship to the United States." That would be problematic, right? That type of stuff. Um, Brenda said the breaking of the wedge formed a W pattern on the daily chart, and went and away it went. Yep, there you go. Um, I mean, it's just overall the pattern is just it's there. We've got this support level to prop us up. We've got actually this is our next one. My bad. This is the next one, not down here. It's this one. I didn't see it. The 68.24 is our next level. So we're close. We've got a confluence of the 55. So there's a lot inside of there right now with what's going on with the fibs with SPX. Jim said SPX daily. I have a Bollinger Band on my chart. Today's candle is bouncing off the bottom band, also getting into a Bollinger Band squeeze with earnings season starting soon. It could squeeze to the downside. Yeah, there you go. There's a lot of indicators pointing to it. I mean, CCI just rolled over massively, right? We're nowhere near our 250 level, which is an extreme, which means there's still opportunity for plenty of room. See, the last time we had the big extreme, guys? Look at the extreme on CCI, and we snapped right from it. Big move. All-time highs off of it, off of that snap, off of that move down. Right? We don't get a lot of 250s down here to 250. Where did we go, actually? Was it 250? We got to 241.41. So 241.41 is what we came down into. Yeah, it's what we came down into that day. So, but the black line is 250. We don't get many days that we stretch down that far. So, will it happen here? I don't know. But overall, is there fear in the market? Yeah, there's blood in the streets, blood in the waters, whatever you want to say, guys. It is an interesting marketplace. You're someone that is newer to the market. You wake up and this is what you see, right? You need to become very, very, very good at position one in the chair. Either sit and watch it and see what goes on. Do some non-funded trades to get some experience in it. I'm fine with that. Usually better off to, unless you're going to do non-funded trades, better off to just walk away. Better off to just literally get up, walk away, get out of to not do any trades at all. Yeah, tonight, Roman said, tonight Netflix earnings hopefully will hit 82. Absolutely. I'm looking forward to it, Roman. I truly am. I've got it written right on the chart. Long stock on bounce off 82. Now, that doesn't mean any of you should buy the stock if it bounces off 82. My plan, which is well thought out, after this split, when you look at the size of Netflix, there's still enough room in there for them to split again. The number of shares they have outstanding to match or catch up to an Amazon or, an Apple and Microsoft and so forth. So there's still enough room for them to split again. So I think there's opportunity for growth. And even with that, Apple has had massive growth in the last year and a half, even after their splits. So, Amazon's had great growth. I mean, the opportunity is there. Microsoft's had phenomenal growth even after all the splits they've done. So that 82 for me is an opportunity. Now, if we are in a free fall and we hit 82 and get a bounce today, I might wait another day. All right. I'm not necessarily saying, oh, 82 is a drop dead. I may not quite get to 82. There was concern before today now. There was concern of us only getting to this 87 and bouncing. You can see we've based there now for 4 days. We've put a little bottom in for the last 4 days around that 82. So could this be the catalyst point? Possibly. Good earnings could trigger a bounce on Amazon, on Netflix. Sorry, I keep saying Amazon. On Netflix could trigger a bounce. My stronger belief is that's not going to be the case. That they're not going to have as good of an earnings as they're as believed, and they're going to see some effect from it. And even if the earnings are good, I think some of the future forecast stuff may be concerning because of what's going on with costs. And we're seeing, some platforms coming out with decent increases. I mean, um, Paramount Plus. I want to say I was paying $6 a month for it, and I just got an email. Now we haven't been raised in years. I just got an email for it that it's going to 8.79 or call it $9. So it went from 6 to 9. They had a 50% increase. How many people are going to keep it, drop it? I don't know. The next couple of weeks and months will tell that. But I think it's February's bill that it's supposed to go up. Um, so Netflix kind of falls into that same realm as these guys. So we're going to have to see where it all lands for them. But if we can get that break and that move down to 80, 82, and we start to bounce from there and the market stabilizes a little bit, to me, it's an opportunity of buying the stock again. And the reason for it is we had this really nice move up, this pullback, which became the catalyst for their all-time highs. All right. Well, that catalyst that came off of there was the second time we hit it on the downside. And really the third, we had a quick little tap in there. Nothing I really count, but these two, that's why that level. And the 82 was the start of the fib. So if we get back, the whole fib would be out of whack if we break this 87.19 on close. Whole fib's out of whack. It's not valid any longer. And you can see it's not been a pretty picture since the split. Not at all. I mean, we do an unsplit, a U, right? You see where we were over 1100. Hit the U again, it puts us back to a split mode. And we've just been a solid stair step in the beginning. It was a solid stair step on the way down in the beginning, and now it's just been a drift to Uglyville. Mark said Taylor Sheridan is no longer working with Paramount 2. There you go. So, S&P 500, great, fine, good. VIX, what a gap on Friday. Big move up today. It was almost like they knew on Friday that something was going to happen. We're up another 67 cents today. Friday was an overreaction without a doubt. There was no way we should have been up that high on Friday. Absolutely none. I don't believe it for a second. I don't care what news was out. There's no way it should have been that big of a move. All right. Upcoming events, guys. So Mastermind coming up on the 20th and then the 27th, which is tonight, is the first one, the 20th. 21st is tomorrow, Mastering the Trade. That is for all of you that are in power option plays. Even if you're in on a trial right now, it doesn't matter. You will be coming to that live Q&A, that training we'll be doing tomorrow. We're going to actually analyze numbers of what's happened with our positions. Inner Circle is coming up on January. That's Inner Circle, yeah, January 26th. Let's say we just did that, but we did the full day training. Next Monday is our check-in. Trading You is on the 26th as well, and then Monster Market Move is on the 29th. Pop, covered call, E-mini are on regular schedule. Power Hour Trading Coaches Playbook, regular schedule. E-mini Revolution, guys. Brandon's got some new tricks up his sleeve on how he trades futures. You're going to want to check out some of what he's doing, folks. It's going to be a great class. I got to look at the manual for it. I'm excited, super excited for it. So, yeah. So get yourself scheduled for that. Andrew, can you drop the link in for that, please? Every one of you, if you've not already registered, y'all need to register for that for Brandon. All right, weekly training topic. $1,000 account. Here's what to do. This inevitable question comes up every year about this time. of I've got to, I'm decided I want to trade. Damn it, I'm putting in a resolution. I'm resolving today that I want to trade, but I don't have a lot to trade with. I have $500, I have $1,000, I have $100. Okay, if you have $100, here's the first thing you should do. Go ahead and pick up some kind of part-time work. I don't care if you are mowing lawns, raking leaves, shoveling snow, a gift wrapper at Christmas time, in a store, bagging supermarket bags. I don't care, pumping gas. Go do something on the side for a couple of weeks to pick up some extra cash to try to get yourself up to $1,000. Right? You need at least 2,000 to have a margin account, which I'm okay if you don't have the margin account. But what I don't want to have, and if you have 500 to start, guys, you start where you are, right? 100 or 200 becomes a lot more difficult to trade with. If you have $500, you can buy a $5 option and you'll be okay. All right. Yeah. So Ed said, great advice. Ed, I'm a big believer in it of if you want it, go work for it. There's a book. If any of you, if you're a business owner, there isn't a business owner in the world that should not read this book. And it's called Who Not How. Right? So we did $1 million in sales last year, and next year, someone recommends or suggests or says we should do 2 million, we should double next year, we should have 100% growth. And what's the first thing people say? How are we going to do that? Look at how much work we did to make the million. How are we going to do that? It's not how, it's who. Who needs to be put in your path to make it work? Who, not how. Right? So if you're a business owner, I'm telling you, read that book. Dan Sullivan, and I forget the guy who really wrote it. It wasn't Dan that wrote it. Dan's name is on it, but Strategic Coach. It's one of the Strategic Coach books. But get yourself up to that $500 if you can, if at all possible. And I understand. I sympathize with people of you just may not have the time. You're working a job that it's a lower pay. You're putting in massive hours right now, and it becomes harder to do. I get it. I understand. I'm not, I don't have the answer for it all. Look, go check out what Gary Vaynerchuk does, Gary V. Go to garage sales and find stuff at garage sales. Go into TJ Maxx and some of those type places and buy stuff that's you can find on Amazon for $40 and they're selling it for 11. Buy it at 11, sell it at 40. Do whatever you can to build the account up, guys. I believe that you will be a better trader if you worked hard to get that money for that account. If you got an extra $2,000 laying around and you just lose it, it doesn't mean as much. Yeah, you lost it. It sucks. But it's not as big. You make it with that $2,000 and you worked your ass off at a gas station, pumping gas or whatever, car wash, whatever it was, and you made that extra cash, it means a lot more, man. You worked hard. Blood, sweat, and tears. American dream, no question. But $1,000 account, what do we do? All right. The first thing I want to do is we need to find out what to trade. All right. So what we're going to do is we're going to go into Omega charts. I'm going to get off of the VIX there just because I don't like playing around when there's colors on the screen. It can mess it up. And I'm going to go in and I'm going to create a new filter. I'm going to go to filters. I'm going to create a new filter. Right? So, and if you have a camera or your screenshot, get it ready. At the very end, I'll pause it for a second so you guys can take a picture of it. We're going to click here to add something in. The very first thing I want you to do is I want you to go to symbol groups and go all the way to the bottom. My list is very long because I have a lot of R's in there, a lot of RR. You won't have those. So go to weekly optionable stocks. That tells me right now there are 662 companies right now potential for you to trade. Oh my God, Rob, that's too many. Exactly. So now what? Let's narrow it down. Let's go here, and I want to get volume in there. So we're going to come down here where it says price and volume, and we're going to go down to volume. Not volume 20 days, 5 days, 90 days, not weighted, just volume. I want to know if today we had a certain volume. Now, it will come up as a percentile. I don't know why. I don't use this. I would default it to value if there was a way to do it. I am going to get rid of the below. There is no highest volume that I would want to see. I would never cap it. But I do want to see a minimum of 1 million. So nothing's happened. It shows 661 right now. If I click into this below box, it now shows me that 603 stocks that have weekly options on them have 1 million shares or more traded every day. Right? Or at least the last trading day. And it's not today. That would be on Friday. All right. We're going to click here to add again. We're going to go back to price and volume, and now we're going to pick close. And again, not close up for 5 days or versus this bar or that bar. No, 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 no. Just close. Closing price. I don't want percentile, I want value. So here's the thing. You've got to pick a price range that will fit for you. So do any of you right now work off of a price range for your stocks? Go ahead and drop them in what range stocks do you trade? In other words, do you trade 50 to 80? Do you trade 100 to 200? 50 to 5,000? What price range do you have? If you have one for your stocks, I'm curious to see what you guys have out there. I'm going to show you what I think it should be set for if you're trading with a $1,000 account. Because the average person should not trade a $5 stock and you shouldn't trade Ford and Booking at the same time. They don't belong in the same portfolio. Okay, a couple of different numbers, and then nothing exorbitant there. Below 100, 34 to 300. Okay, and there's 100 to 150. All right, so we're going to go here, and we're going to change the bottom number to 50. We're going to change the top number to 150. Now, when I do that, you got to click off the 150 or it's not going to register, right? There's 163 stocks. Guys, there are 163 stocks that are between 50 and 150 that have 1 million shares traded every day. That's 150 candidates as a potential for you to trade. It's still too many, in my opinion, right? The question you've got to ask yourself is how much volatility do you really want to contend with in there? Do you want really volatile stocks? Because one of the things you can add in here is something called beta, B-E-T-A. And let's see, miscellaneous maybe. I don't remember where it is. It's not specialty. It's not cash flows. It's not balance sheets. Valuations. I want beta. Price and volume. There we go. It's under price and volume. I never remember where it is. So beta. First off, get away from percentile. What does beta tell me? If you say, Rob, I want stocks that are as volatile as the S&P 500, then you have a minimum beta of 1. 1 is the S&P 500, period. Okay? I want stocks that are as volatile or maybe more volatile as the S&P. Now, is there anything wrong with having lower than the S&P? No, you can do 0.75, right? And you could put 2, which gives you now 70, I'll tell you in a second, 75 candidates, right? Maybe 2 is a little high. I don't want that much volatility. Maybe I go to 1.5. I get 54 stocks. You now have a list of 54 candidates that you could potentially trade. What you're going to do is you're going to save this list. RR under 1K account. Today is 1-20-26. Okay. I don't normally put the date. I don't have any intention of keeping this filter. So I'm going to put it in there so I can easily find it. But I put RR in front of everything I do because my initials. So you can change your initials to whatever it is. But that lets me know that I created it and it's not something that I found inside of the filter. Okay. So that's the list. If you haven't already, take a screenshot of it. Okay. And then we can go ahead and close this down. Oh, cancel. Yeah, I want to save it. I thought I did. Did I change something on it? All right, we'll go to display list. I know we'll close. So here's my stocks. Right now you can, we'll switch this around. All right, so I moved close and actually I don't want to really do that. I should have left it where it was. So guys, I have a filter in here called RR Fitted, right? All it is double the wildest average true range. That's all that is, okay? So, with the wildest of 13. I don't care about the closing price. You know what I do care about? How much does the stock move every day? right? And actually, you know what we could do? We can go back in here and we could find the one we just did. I forgot what I called it now. What did we call it? I had a date in it. 11 of 22. Remember what we called it? RR under. Okay, there we go. So I'm not down that far yet. Thank you. Here we go. So where do we go and edit this? I'm going to pull volatility out. I'm going to get beta out of there. I'm going to remove that condition. And then I'm going to come in here and add one more condition. And I'm going to add RR Wilder's average true range. There's a lot of them. It's on the miscellaneous. You don't have it. I'll show it to you though, so you can copy it. You can make it. Okay. So we're going to say I want this to move at least $2 a day. All right. That gives us 109. So let's go ahead and do that one more time instead. Oh, it's not simple groups. Miscellaneous. Let's go to 2.5. We're going to get rid of the 2. All right, we've got 79. So now I've got 79 stocks that move at least $2 a day. Why is that important? Well, if I have a stock here at Walmart, they move $4.80 a day. Right? I'm sorry, they've got a fib of 480, which means they move half of that, $2.40 a day. Right? If that moves $2 a day, if I'm trying to make $3 or $4 or $5 on my trade, and I have a Wilder's average true range that it only gives me a Wilder's of $2.50 today, 2.25 today, then I'm not going to be able to hit my target on this stock. So putting a Wilder's in there, and I didn't show it to you, but putting a Wilder's average true range inside of there is critical. Here, get your screenshot ready. I'll go open this one up. We'll edit this condition. It's a long phrase, right? Here it is. That's the entire condition. I sent it to host and panelists. I need to send to everyone. Let's do it again. But actually, this is an older filter, but it should be 13, not 8. All right. Let's change that to 13. Save. No, I don't want to recalculate right now. Close. Okay. So that's the filter that is created. And what happened now? Now you've got a list of stocks that you can work off of. You need to go into your options watch list, your options software, whether it's TOS or wherever you're going. You need to look at, if you're going to day trade, you need to look at front week options. Ideally, you start looking at this on a Monday. You look at front week options that will expire this Friday. Okay. It'll expire this Friday. You look at the front week option and say, go find that 65 to 85 delta. Closer to 65 is better. What is the cost of the option? What's the bid-ask spread? What's the open interest? Does it have at least 100 open interest? Is my bid-ask spread less than 50 cents? And I wouldn't go more than 50. If you're bigger than 50 cents on your spreads, then you're probably too wide with a very small account to be playing with that game. You're going to want to check this when the market's open, ideally, because when the market's closed, you could have prices not settled properly. You know, they adjusted one side, the bid or the ask, and not the other, and nothing is wrong, right? And there's a $3 bid ask spread or a 75-cent bid ask spread. You want to keep it small. And then the goal then is once you find those candidates, it's everything else that we teach. Now let's go out and find that trade where you've got it near a key level, fib, a support, or resistance, whatever it is, and it's bouncing off that level. And then set that trade based on that. But finding those candidates right here, right now is critical. Yeah, sure. No problem, Brenda. I'll bring it back up. But I did put it, Brenda, in the text chat to everybody. All it is Wilder's average true range, AVG, and that's why I typed it in. or copy and paste it in for everybody. Average is AVG, true range, parentheses 13, a setting of 13, greater than 249, which means 250 or greater. Okay. So that, and if you're not sure how to do this, call Genesis and say, hey, Rob gave me a criteria. How do I enter it in? And they'll walk you through it. It's that simple. It really is. It's pretty straightforward to use. Okay. So it's a good platform. And this is one of the best parts of it is their, common sense filters and criteria. All right. Excellent. So, guys, we've got like 3 minutes left. If there's a candidate you want me to take a look at, drop them in. I got a minute for a couple of them, but that's about it. So, Dennis said, what are some of the strategic ways to work around the day trading rule for accounts under $25,000? Okay, so it's pretty simple, Dennis. There's very little you can do except if you choose to not create a margin account. If you don't have a margin account, let's say you had $10,000, you can do, if you did a $1,000 trade, you could do 10 $1,000 trades today without a margin account on a $10,000 account. But the second you hit your cap of what you have in your account, the cash value, you're done with opening trades for that day until it resets and you do it again tomorrow. So if you spend all $10,000 in one trade, you can't trade any longer. If you had a $2,000 account, I'm sorry, if you had the same $10,000 account, but a margin account, and you drop that 10 grand into one trade and it closed out, well, now you can take that same 10 grand and trade again, granted up to 3 times in a week in a 5-day period. But the only way around it is to not have the margin account. And some strategies, some spreads and the likes require margin. So just caution grasshopper when it comes to that. It's not, I like the idea of it, but when you run out of money, you run out of money until tomorrow. But that's the only alternative you have is that. And they're working on that. And there is conversation of that is unconstitutional. It's not fair. How dare you tell me that I can't invest my money the way that I choose to? And that's what they're doing. And I know why it was done. I was there when it happened, when people were day trading their life savings away, and their one guy, they had 20 something thousand dollars saved up for a wedding, and he blew it all day trading in a prop firm. And it was bad. It was bad because of the allure of it's easy money, which it's not. Nothing worth it is easy. There you go. So Jim said, instead of calling Genesis to create the filter, do you think ChatGPT might have the answer? Yeah, I would definitely try it. I've done stuff with programming before on them. Dennis said, I have a habit of running out of day trades on my margin account. Okay. Well, yeah, and that's it. Because you only get to 3 in a week. You get 3 intraday trades in a 5-day period. It's insane. Why? If why? I'm not even going to try to justify, well, this one maybe. No, you lost money. It's your money. It's your dang money. Now, there has been a case historically from when I first started. It was a newsy item then. There was a guy that had $1 million in his account. I think it was a Merrill that he was with, but somebody like that. It was a big name like a Merrill. I don't remember. And he wanted to sell naked puts. And they said, yeah, no, we don't do that. We don't let you do that. No, no, no. I'll sign a waiver that says it's my decisions. You guys have nothing to say about it. You're not making any decisions, any choices. And they agreed. They let him do it. He lost his $1 million. He sued them and he won because the court said the firm, they have a fiduciary responsibility. They should have protected him from himself. Protected him from himself. Drive to McDonald's, go through the drive-thru, get a hot cup of coffee, hold it in between your legs, spill it, burn yourself, sue, and win. No responsibility. Yeah, there you go, Dennis. You wind up holding overnight. I get it. Well, Dennis, they'll let you get out of a trade. Oh, but I see. But if you got out of the trade, it triggers your third intraday trade. I gotcha. Because if something happened and you had a trade that you needed to close, they'll let you close the trade. They will not let you initiate another open trade. Is what it is. So SPY, we'll just do these two, SPY and gold, since they're very hot right now. SPY, guys, look, if we break the 680 retest and fail, 675 is my target. No ifs, ands, or buts. I am all over it if that happens. Keep my eye on where the next swing low is there. And on gold, GLD, There we go. Okay. Okay. I'm waiting for today's to trigger in. There you go. All right. Up $16. Goodness gracious, which is like that 174 I called out before, 179 to my wife. So right now it's in the middle of nowhere. I mean, this is just gambler's territory, Brenda. You know, when we start looking at this stuff like this, it's got too big of a move already, and it scares the hell out of me personally. So, all right, with that, everybody, we'll have a great rest of your day. God bless. I'm going to leave the room open a couple of minutes. There are some links that are in the chat that you can grab. Go do that. Go grab the wildest average true range I dropped in there. Just change the numbers. You can use the same filter, make it 2.5, then make it 3, make another one 4, make another one 5, and you'll have all the ones you want already created and done. All right, everybody, have a great day. We'll talk soon. Bye.